All right, good morning, good afternoon, good evening, everybody. This is Will Bridges from 123Trade. Got an interesting trading session for you this week. I'm sure that all of you guys have seen the news. Everybody's probably got a good idea that the markets are on fire this week. And, maybe not on fire. They were just making a lot of moves. And, well, generally, you probably want to know what might be fun to look at. So we're going to take a lot of looks at lots of things. And we're going to go through some fundamental news here. I'm going to talk a little bit about what happens in risk on, risk off situations, but we'll get more into that once we get more into the actual session itself. So I'm going to go ahead and get the show on the road. No reason to waste anybody's time. Let's get right to it. First things first, got to show the risk disclaimer. There's no such thing as a guaranteed trade or a guaranteed investment. If you put your money into any market, then you're putting your capital at risk. You have to risk it to get the biscuit, people. So I will be using a stop loss, and you guys will see me use stuff like that, well, pretty much all the time. If you have a question, then please, please, please ask me. Put it in the chat box. I want to make sure everybody gets their questions answered. I want to make sure that, well, let's just say I didn't come here to do this trading session for me. I can very easily trade by myself. I want to make sure I get you guys as much help and as much cool information as I possibly can. I want to make sure everybody's awake. So Gabe, Herb, Tesh, Iso, Yanni, Leonard, Mike, Peter, Ricardo, Syed, Shika. I hope you guys are ready. Looks like there's a lot of people floating in here still. But if you do have a question, then please let me know. There's a lot of information on our website as well. If realistically, if you know anybody that needs an account, or you want to open another one, or you want to run, one strategy in this account and another strategy in this other account that you don't have, then let us know. Send an email to brokers@123trade.com and they'll get you set up. We want to provide as much guidance and mentorship as we can. Cool thing is that we can actually do all this service for free. So I think generally speaking, that's fairly attractive for most people. That said, I'm going to show a lot of analysis in here on Fridays. And really, if you haven't seen it yet, there are a lot of bonuses available if you go to 123trade.com and you check out, some deposit bonuses. So if you're looking to make a deposit into your trading account, you want to put $25,000 in, whatever the case might be, then you might be able to get something really neat for free. So if you have questions, like I said, send an email, brokers@123trade.com. I used to show all of this deck in this trading session. For those of you that are here brand new, who is here brand new? Is anybody here for the first time? How to identify which currency pair is tradable today and which is not. We're going to get into that, Syed, for sure. But I used to show people, this is how you place your first trade and all that stuff and the importance of that. You're going to watch me trade live money in here today. If you want to place a trade, you can. I'm not telling you to do anything. I'm going to kind of give you guys an idea, because I'm going to trade with live money, what kind of makes sense based on what I've learned when it comes to the lot sizes and how far away to put stop losses and that type of stuff. Okay, so right now I know a lot of people are probably more trying to figure out, well, what can I even trade today? Like, what even makes sense? Okay, so we're going to get to that in a second here. But if you guys need more information like this, check out the website, 123trade.com. There's lots of news on there also on the news page. So let's get right to it. We'll get started with the fun stuff, economic calendar. I'm actually going to crunch this thing down a little bit so we don't have to look at so much information. We'll just go to this week. And this is just the high impact announcements that happened so far this week. German flash manufacturing PMIs. So the production managers index, that's still bullish. Anything over 50 is bullish. Okay, it was forecasted to be more bullish than it came out to be, but can't win them all. That said, both of these numbers are fairly strong for the euro, and nothing that anybody would be alarmed about by any stretch of the imagination, because they're positive. Even this red one, the color doesn't necessarily mean this is bad. Like I said, anything over 50 is a positive signal. So if you look at the actual graph here, everything under 50 is pointed down. It's a real easy way to tell what I'm talking about. But if you look at these little graphs, you'll get an idea of where we are historically, and this stuff looks pretty healthy to me. So I'm going to go ahead and move on. New Zealand, okay, their cash rate, they were expected to raise it. They raised their interest rate. So no surprises from them, but they are on an uptick. Okay, and what that might mean is that there might be a lot. I've been talking about it for a while. For some reason, I like to make jokes, never wrong, just early. But I think it might be time for this NZD. So we're going to look at some NZD pairs today because that's a heck of a long distance away from Ukraine. And, realistically, that might be a place where big banks might decide to buy some cheap NZD. And when I say cheap, I just mean they're at a low price. We're going to look at the index here in a second. And I'll show you guys what I mean by that. Otherwise, okay, in the UK, they are still looking at, lots of issues. They are part of Europe. There's lots of sanctioning happening. Oil supply is going to get cut like crazy. So, for the pumping that the UK does, that might actually benefit them. But that said, trouble in Europe, potential war, potential ongoing issues, is really not something that lends to the UK being able to easily raise interest rates. Okay, so if they were planning on raising rates, and they have been, they may not. And that might happen to the US as well. Hard to say. Maybe, maybe not. We're going to look at next week real quick and give you guys an idea of what big announcements are coming out next week. So maybe we can find a little rumor that we can trade. But this GDP number here is inflated as hell. I don't feel bad saying it that way because there's no way that it would ever be this high without the inflation involved. Okay, so I don't know if you guys can see this. Okay, but these numbers are very high when you're talking about gross domestic product in the US. The reason why that is because we've been running a federal state of emergency and spending all of the money for 2 years. Okay, so they have amped up the government spending, amped up the government budget, and they're making it rain, spending money all over the place. Okay, so that being said, okay, really doesn't matter what my political view is. That's a growth number. Okay, and most people aren't necessarily going to understand or care about where the money came from, because at the end of the day, it's still getting spent. Doesn't matter if the government's doing it, whoever, government spending is included in gross domestic product. So this is why you'll consistently see big growth numbers like this from places like China, because, well, let's just say their government decides to spend as much as their government wants to spend. They have one party. There's no fights about anything when it comes to spending money in the government there. That's what that's all about. Okay, so let's go to more, see what's going on next week. Okay, we are going to see the end of the month on Monday, so there is a non-farm payroll U.S. jobs report coming out next week on Friday. Okay, so that should be a little bit more interesting, I think, in my opinion, than this week might be. This week, I think, is a little bit more convoluted as to what might happen. U.S. authorities are saying that that Ukraine will be conquered in 96 hours. And maybe it will be and maybe it won't. But that's essentially saying that Russia's going to just take Ukraine this weekend, and there's nothing anybody can do about it. So if there's nothing anybody can do about it, they're going to sanction Russia. Oil supply is going to stay low. Canada, when we come down here, we're looking at Canada's rate statement. They're going to raise rates. At least that's what the rumor is. This is the forecasted number here in the middle. They're talking about doubling their interest rate is really what that is. It's only 25 basis points, but that's a 2x. You guys understand where I'm going with this? What do you guys think might happen to the Canadian dollar if oil supply stays low? Oil climbs, back over the 100 price we saw yesterday, and they raise interest rates. Might that make the Canadian dollar, by comparison, a little bit stronger? You guys think that I'm taking crazy pills, or you guys understand where I'm going? We're going to look at this anyways. We're going to see what's going on. We're going to see if we can find Canadian dollars at low prices, because generally speaking, I'm looking for that. I'm looking for New Zealand dollars at low prices. That's pretty much what I want to check out for right now for today. I've got a couple of trades that are open right now. Okay. Taking a little bit, some people call it a beating. I call it losing $12. But this is the USD/JPY. And the reason why I got into this, to begin with, I'll come back to that NZDX after I show you guys more or less what I was thinking with the USD JPY. I'm going to remove all the lines that are on here so I can make this a little bit more clear. Let's see, trading. I don't want to show the open stuff. Save. Perfect. Okay, let's crunch this thing down. And I'm going to try to make this quick for you guys. Really what I was looking at as far as my reasoning for entering a sell position here, because this is an uptrend. Okay, if you guys see this here, that's an uptrend. We're above that line. There's no confirmed downtrend. Okay, so I wasn't looking at a trend trade here. Okay, what I was looking at, you guys know my two favorite tools? What I was looking at is this rectangle here, okay? And realistically speaking, we're at a relatively popular price. If I zoom out a little bit further here, maybe I go to the weekly time frame, this will be a little bit more obvious. I pull this box over a little further. Okay, we've got some pretty nice price pocket activity at this price. We've got some really big support levels in this pocket. If you guys don't know what I mean, I'm going to circle the levels. That was a big turnaround. Okay, we're talking lots of pips. We measure this here, just the bounce off of there. Okay, you're talking about an 900, 950 pip move. We bounced off of this price. So if it bounced 900 up, you know, hey, what's the chances it can't bounce downward? Because previous support likes to become future resistance, and primarily because everything over time likes to regress towards the mean, the average. Okay, so me knowing that, essentially that we also haven't had prices, we've got prices on top that haven't been breached in a very long time. And what might come next for the world is that if the Ukraine is taken very easily by Putin and nobody stops him, and he just kind of moves in and takes it, just like he did with the Crimea during the Obama administration in 2014, then maybe China might make a move on Taiwan, is what the fear is. And I think that's warranted, because if you ask the Chinese government, Taiwan has always been part of China. What are you talking about, USA? They're not a country. And, you know, everybody's got their opinion, doesn't matter. But do you guys think that there's a chance that China might try to make their move while everyone else is focused on Europe? Anybody think, you know, is that possible? I'm not saying, hey, look, it's going to happen, mark your calendar. Is that possible? That's really the only question as a trader that you need to know. Is it possible? You guys, what do you guys think? YRN in the chat box. I would love to know what your opinions are. I want to make sure that you guys don't think I'm taking crazy pills. But if you guys think it's possible that that could happen, just wire in. If it's not, if you think that there's no chance that China's ever going to want to do that, they're going to let Taiwan continue doing Taiwan things, then yeah, some of you are saying things like definite. Okay, I'm not gonna, I can't, I may feel that way, but I don't think we can say that necessarily. But that said, there's a lot of people that think it could happen, so that causes uncertainty. Okay, when you have uncertainty, typically that means I'm not sure who asked the question here earlier, you want to know, hey, what pairs should we be looking at? Okay, that's why I'm in this dollar yen, because typically the yen is a shelter currency. So if I think that the US is about to drain a bunch of money in being at war with Russia and potentially stirring the pot with China, and lots of unrest in the world. Listen, every country uses dollars. I mean, not every, I would say. Actually, yeah, anybody that buys oil or gold. We got some more comments in here. Yeah, the largest global computer chip maker. Yeah. And Russia just took Chernobyl yesterday. I don't know if anyone knows, there's actually working power plants there. So it was a literal power grab into Ukraine. Quite literal. So it wouldn't be crazy surprising to me if China wanted to take over as the largest, computer chip maker, and maybe bring the US car industry to their knees if they want to, because that's already kind of happening. So that said, this is what I was looking at. I know I got on a tangent there. We really talked for a while. Even if I just aim at the middle of this box, the average, where there's been lots of turnarounds, people paid that price a lot. There's a chance they pay it again. That's really my reasoning for placing that trade. That's my strategy. I think things work their way back towards the average, and that's really why it makes sense to me. Most is the risk reward ratio. So I'm in this one. I'm going to let it ride. I think I've got a stop loss a little bit closer on one of these trades, but I'm going to let this one ride for a while. I strongly believe that this is going to come down. And, realistically speaking, it's not that expensive for me to have a stop loss at a place that, really the market hasn't hit really since all the way back here, because I'm higher than that. So we're talking about, January of 2016. It's been 6 years since we hit that price. So to have a stop loss there, I'm not going to wake up, stare at this every 2 minutes to see if I hit my stop. It's just not going to happen soon. So the Euro Pound, I posted this one in the Facebook group and on Discord. So if you're not in those groups, you probably should be if you want to see stuff like this when it happens. I've been in this one for a couple of days. It is a slow mover, to say the least. But I'm going to zoom out here, get rid of some stuff, so that you guys can all see why I decided that I wanted to buy this on Tuesday. And let's go to trading, buy, arrow markers, goodbye, save. All right, perfect. So this one's going to be real straightforward and to the point. Right here is the last 6 years. Okay, so everybody's heard the term buy low and sell high. It is the oldest strategy in trading. And do you guys see other turnarounds at the bottom here? Because I do, and that's really all it took for me. At this point, it's very close. Well, not all it took. I'm going to zoom in here and show you one more thing that it did for me. Okay, so the market's turned and made very large gains from this price in the past. So I bought it. Didn't think twice. Reckless endangerment for me, I don't think so. We come down here. This is the day chart, just to give you guys a little bit of a closer look. And typically you notice a confirmed low, okay, a true low, some people might call it, whatever. It's going to mean that there are 2 candles to the left and 2 candles to the right, and this low is lower than both of those. Okay, so that being said, this here is a true low. Right here, okay? That's really at the edge of our boundary that I drew there. Interesting thing is we've got another one right here. That's another true low. So we're making higher lows, and this looks like a higher high to me. We've also got this neat little trend line break that happened in here, okay? So a lot of people, might recognize that we are called 123Trade, and there's a 1, there's a 2, and this could be our 3. So that being said, this one's already on the move. It's kind of at a high price. Not everyone's going to want to jump in it at the high price. That said, it could go a heck of a lot further, in my opinion. Let's zoom in a little bit. So maybe we can find a scalp type of opportunity, maybe get an entry point place for those of you that didn't get the memo earlier this week when I actually made this trade. I'm going to get this out of my way. And we're going to do something straightforward here. I'm going to pull a Fibonacci. I know revolutionary, this is an old tool. But we're close to our extension level. If I want to figure out where might be a reasonable place for me to expect the market to maybe retrace to, okay? Where I might want to enter, okay? And where I might want to put my stop loss, because all of those are decisions that you should make. And actually, you know what? I think I'm a little bit overzealous on this. I think I'm going to back this out. I don't like that Fibonacci. Let's come to the 1 hour. Because I didn't really notice. I guess we didn't hit our blue level. So I'm still going to assume red extension level. That could be up here at 83.9. That's still a little bit higher than where we are. But in my opinion, how many of you guys have heard of supply and demand? Another, I know, revolutionary idea I just threw at you. It looks like we've got some. Okay, right here. Okay, so what that means is that I think the market come back and test this zone before it decides to go higher. That is, if it does continue on its upward trend. Okay, because currently, since we've got it confirmed to the left, to the right over here, okay, this is where our trend is. Okay, so we're above that. I'm not going to expect it to come crazy low. I just want to make sure that, well, all things considered, I get out where I probably should. That said, this might actually be, for some people that are going to think, you know what, this got really close to our blue level. I'm going to be conservative. I'm going to pull this manual Fibonacci level because we hit our blue extension above. Okay. And that might make it a little bit easier for me to figure out where I want to jump in. It might make me a little bit more aggressive on the entry. That being said, my exit, if I want to scalp something like this, be up my red line above. Oh, I'm doing it for you, Syed. I got you. This is actually what I'm going to do. I'm already in this position, so this may just be a reload price for me, because I do like this for a long way. And there's a couple great lows there. I think I may be able to get a little bit closelier. See what we got on the 15-minute chart. All right, now I can get a real nice look. Make sure that I'm not being overzealous on anything. Okay, but realistically, you know, could the market come lower? Might I want to be lower than this? You guys think that there's a chance it could be down here? We could have actually 2 entries here is what might end up happening. If I wasn't in this already, this is kind of what I would be planning. Depending on capital that you guys have in your account, may not make as much sense for you. But it does look like between these 2 blue lines is kind of my buy zone. So I wouldn't necessarily want to just pile into it right now. I might wait until I get into this buy zone. Okay. And really kind of anywhere in there. It could easily turn around before. So a lot of people might enter at this top line because they're okay with a risk reward ratio that we're talking, you know, let's say you got into the aggressive level, the top blue line I'm talking about. This is a 30 pip risk to try to get 40 pips. So not a huge risk, not a huge, and well, depending on the lot size, you can make it a huge risk, but you don't necessarily want to do that. You want to be proportionate with your account. So, you know, this account that you guys are watching me trade, there's $650 or something in here. Okay. I might risk something like $6, 1% of my account. Okay. But that would only be to make 8. So not a crazy risk reward ratio, not great. This trade below here is to risk, you know, roughly $2 to try to make 5. So I could turn that into, you know, a $6 risk to make 15 and have a very palatable risk reward ratio that I can still go look for more trades. I can enter it again later if I lose. I don't have to worry about tying up all of my money, you know, because right now, used margin, I've got $93 I'm using just to hold the positions I have open. I've only got 3 trades running. Okay, so you guys need to keep all this stuff in perspective. Okay, you don't want to get into trades that aren't great. Okay, this, in my opinion, high probability. I might jump in at this top blue level here and reload on this thing. I'm already in it once, so what I'm going to do is I'm going to enter again. If it does come back, my direction's confirmed. Okay, so I want to pile on to my winner. I'm going to enter again at this 83 level. Should we get down there? Oh, somehow I didn't delete that, and it keeps wanting to redraw that for me. 83727. That's what I'm looking at. And then my stop loss, I'm gonna go ahead and punch this in here. We're talking 83,413. Okay, and my limit price. So this one is a bigger position than I've got in my other, well, my original trade, the position trade I placed, had a wider stop loss. Generally speaking, that was prior to me getting confirmation of an upward move. We're getting higher highs and higher lows on this chart. So I want to make as much money off of it as I can. So my limit price, make sure that I've got this here. We'll call it 84. Let's see how many pips that is. I want to say it was 40 that we were searching for. I've got my measuring tool in the way, so I'm just going to go ahead and type in the 40. End of the day, I think it's coming a heck of a lot higher anyways. But I like to take the money and run. I'm going to go ahead and place this pending buy. Okay. So if the market comes back down, taps all those popular prices that happened in the last, you know, day, then it's going to enter me in at a better price than right now. It is the, you know, really quick negotiation that you can place, you know, without actually having to talk to anybody. Which I know that's how most people like to live their lives these days. But let's keep on moving here. Okay, so I wanted to look at some Canadian pairs. And I wanted to look at some NZD. And I want to show you guys real quick before we get too far into this so we can run through a bunch of NZD pairs quickly. I'm going to show you guys the NZDX. Okay, this is the index. Clear out our screen here. Go to the all time frame. Get some more real estate on here. I want the whole world in my hands. But yeah, check this out. So I'm going to draw a trend line on the left here, because time starts on the left and it moves to the right. And essentially what I'm looking at, it's a pretty nice trend line break. I already made a reference to 1, 2, 3 here. Here's a 1. This is a 2. You guys think that could be our 3? What do you guys think? Maybe. Maybe. There's no guarantees in trading, folks, but let's come down to the week. Let's take a closer look. Maybe actually the day is where you're going to be able to see this. Okay, so at this point, we have been making on the highest time frame that I just showed you guys. Higher highs, higher lows. Okay, this low on our little elbow over here is much lower, or much higher, excuse me, than all of these prices on the left. So this is a higher low. Okay, and this is a higher high right here than this one. And we've got that confirmed on the right side of our trend line. Okay, so I'm on the right side, higher highs, higher lows are happening. And the cool part is I've also got a counter trend that happened here for my backside test, and it looks like it's broken. What do you guys think? You guys think it might be bull time on the NZD? Give me a Y or an N. What do you guys think? I want to make sure you guys are all awake in here. I have a tendency to go on a diatribe for a long time. Thank you, Herb. Obviously, you know I agree with you. But that being said, I'm not doing anything crazy. I haven't shown you guys any, magic process here yet. I just want to try to make people understand that, you don't have to make trading complicated. You can make it simple. I have been running a robot this year also. So I've been a little bit lazier than usual. I'm not sure why we just did that. Let's go to the NZD USD. That's what I wanted to go to. Okay, we're going to clear this out. Go to the all time frame here. This is a lot more information than we had on the actual index itself. So I'm going to start from the top. This is the high time frame. This is the month. Okay, so take a look here. That looks like an uptrend on the top to me. Okay, and on the bottom, that looks like an uptrend to me also. Okay, so we've had a couple of counter trends happen over the years. There's one. We went up a lot. Here's a really steep one. It went up a lot after we broke that. And you know what's cool is that here's one here. This one looks a lot like our index chart. Let me clean this one up a little bit, because this is actual, more recent time. Well, I may not be as cavalier with where I put the actual trend line. If I can click the right spot here. Essentially, that's what we're looking at. Okay. Zoom in here. We haven't quite gotten the confirmation that we have on the actual index itself. Okay. When do I do other live sessions? Sam, I don't do any. This is the only one that I do. Occasionally I did one actually for a partner company this week. That was actually the first time I've done another live session for anybody in probably a good 6 months. But anyways, let's keep on moving here. If we come down to our day chart, this is kind of what I'm predicating my opportunity on. Okay, are we breaking that trend line? We thinking about it? Seems like we broke it. Okay, so that being said, I'm bullish on the NZD USD because they're a heck of a long way away from Europe and they've got nothing to do with the war. If anything, they might just sell more milk. Anybody see? I mean, you don't have to know anything about any of the stuff that I'm talking about as far as the economics of the situation goes. For me, it just makes it easier to know where to look because I feel like we found some pretty effective looking trades and we haven't looked at a whole lot of charts. So I'm going to pull a fib here. We hit an extension. We came back down. We hit our 382. I'm going to come down to a lower time frame, see if I can get a better idea because I want to figure out where I can enter because I want to buy on the NZD USD. I'm going to clear out what I've got. I'm already biased to the north. There's really no reason for me to care about all that other analysis anymore. I'll pull a fresh Fibonacci for myself here on our 2 hour. Looks like I might have missed the first initial candle there. Make sure I get the right place. There we go. And we came down to our blue level below. It looks like it's making a little bit of a retrace right now, testing at our 236 that it just busted through. We've got a counter trend that happened and we broke it. You guys see that there. So wouldn't be crazy if this thing came up higher. Cool thing is that we don't really have to have our stop loss crazy low because we're already getting higher lows on the bottom. Okay, if we stop getting higher lows, like this is a low here, here's a higher one, you know, here's a higher one, and really here's a higher one over here. Okay, so I'm already getting higher lows. This is a 2 hour chart. This is not an ineffectual time frame. You get down into the 15 minute, you know, the 5 minute, the 1 minute, those are no more noise than what you're going to see on the higher time frames. That's why, you know, I'll place trades. I love to place trades from the monthly. That's where I decided I wanted to get into that euro pound, was on the monthly. When you find something like that on the monthly time frame, it's, well, in my brain, go time, because that's where you've got the most information to make a decision, and you've got really the most data. Okay, so if I'm looking at, you know, data back to January of this year, I'm not looking at as much. Okay, but I am looking for a short-term position, so cool, doesn't matter. Let's look for an exit at our blue level above. Okay, I might actually look for a higher level exit if we go to the 4 hour, just because we are at somewhat of a high price right now within this range, and I want to figure out where I might want to jump out of this thing later. Look for a good exit price here that'll make sense for my risk reward. I'm going to mark current market price in blue there. It's my favorite one to mark. I do it on every trade that I open, and the reason why is because I need perspective. Okay, I need to understand, am I getting a reasonable opportunity for the amount of money that I'm going to risk? Okay, am I risking less than I plan to make? Okay, that is really the whole point. Okay, am I risking less than I want to make? I don't want to have to win every time. This year has been great so far. Just to give you guys an idea, this little old trading account and I have had lots of fun this year. And this is how it's gone, okay? And really just since the middle of January, okay? This is the FX book associated with this live account. And from a profit standpoint, it's been neat. I don't know why that's private. Oh, I'm not signed in. That's what that is. I need to make that public anyways because I don't really care. But essentially, I'm up 19% this month, 11.5% last month, okay? So I don't have to win every time. We've been winning close to that. You know, this 87% of longs won, 93% of shorts won, 54 trades. It looks like I've only lost 6. So, you know, 48 out of 54 ain't bad, but, you know, I could lose 10 in a row. And I don't want to give away this money that I already made, this gain that I've already made, because I want to compound on it in March. Okay, so I'm not going to put myself at too much risk on any given trade. And if I look at this one here, okay, is this going to be a lot of risk for me? Is this something I can afford? Let's find out. Where's my, click the wrong tool here. I don't want to draw a line. Let me out of here. Here we go. So from current market price, okay, I'm looking at a 150 pip risk, okay, to try to capture 200. So it's essentially, what is that? 1.3 to 1. Okay, so a little bit better than 2 to 1. You know, if I trade like this all the time, I've got to win 3, 4 out of 10 to be at least break even. Be profitable. Do I think this is high probability? Yes. If it comes back down to a lower price, would I buy it again? Yes. So all of those things considered, I know New Zealand is raising interest rates. They're much more hawkish than any other government on this earth. US might potentially tie itself up in 2 different wars right now. I think I'm going to buy the NZD. I think I feel good about that. So if this pip count here on the bottom, you know, I'm looking at my account size is really too small for me to want to risk the farm on it. So I'm going to go ahead and risk a 0.01. Okay, that's $15 roughly. Okay, and I'm going to try to capture, you know, 20 bucks. Okay, I need to get to the market order side actually before I do this, because I'm going to do this right now. So 0.01, we're doing 150 pip risk. I can just type that on the right side over here. Be a little bit lazier on this one. 200 pips to the north. It's already moving our way. This is where I click the buy button and I feed some juice to the goose. So I'm now in. I don't have anything else that I have to do. This could hit in a day. It could hit never. I could lose right after this session. You know, the point is that I don't have to care about this now. I don't have anything else to do because I already know I'm okay with the risk. What else is there to think about? I think it's going to come up. And it looks like if we zoom out here, there's lots of reason to believe we might tap this price again. You guys see all this previous support over here? Okay. Previous support, as I said before, I didn't want to draw a line. I want circles. Circles. Control Z. Goodbye. But yeah, these are previous support. Lots of it. Okay. I'm just going to circle all this. You guys get the point. That price might get hit again, and I want to be around when it happens. So, and really, I don't have to be around when it happens. My take profit's going to be around when it happens and hopefully do the job for me. Okay, so let's move on. Let's find another one. We found one bullish spot, and I think Trish had asked me about this NZD Swiss, a couple of weeks ago. This one's been pretty bullish. It looks like it might be an opportunity to maybe short for a short period of time, but we're going to come to the higher time frame. I'm going to give you guys an idea of why I think this one is interesting. Okay, what this one would really be, this is kind of a buy the invasion strategy on here, because if the war in Ukraine is over this weekend, and the Swiss franc is a shelter currency in Europe. So if the war is over this weekend and they're basically just sanctioning Europe, oil's going to be expensive. Everyone's going to have to pay more money to do everything. There might be a little bit of a sell-off on the Swiss franc based on my experience. Okay. So that being said, it looks like it's already started to happen. We got this little bit of a resurgence here. I'm going to draw a trend line here, okay? So it doesn't really matter what I think and what I say. It matters if I can manage the risk, okay? That's really what trading is all about. And when you can get to that point and realize that, hey, I'm really smart, but, I'm wrong all the time because you're going to lose trades. You are. Guarantee it. You will lose trades. Hopefully you can win more often. It's more fun to win, obviously, but you will lose. Okay, so you have to accept that, because if you don't, you will take unnecessary risks and put yourself in trouble. Okay, has anyone ever taken an unnecessary risk they wish they had never clicked buy on? Please type in the chat box. Give me a Y or an N. Have you ever placed a trade that later you wished you didn't do? I'll raise my hand for you right now. I've done it. Anybody ever opened a trade and wish they didn't do it later? You guys know why that happens, right? Yeah, thanks. Thanks, Herb. Thanks, Tarek, Dennis, Mike, Sam, Jose, Newmeyer. You guys all know why that happens too. Greed. Thank you, Tarek. Thank you. There is no such thing as a guaranteed win. Okay? If the war in Ukraine is over next week, I am confident that our super sexy NZD CHF can come up a lot. If it's not, maybe it won't. Okay, if things get worse in Europe, I'm gonna change my mind and I'm gonna bet on Swiss franc strength, because I can't predict the future. Okay, that's why there's risk in trading. As soon as you guys get a crystal ball, let me know. I would love to take looks at it as often as you'll let me. But end of the day, that's really what you need to realize, is that if you want to avoid those situations where you wake up in the morning and you're like, oh my gosh, my trading account is bleeding. Okay, you don't have to go through that. All you have to do is plan for the possibility that you could be wrong. I know it sounds like I feel like I'm being a jerk if I harp on this too much. So we're going to stop and we're going to find a trading position. But essentially, that's what this is all about. The people that can control their impulse to overtrade their account are the ones that gradually grow it, add funds to their account over time, and profit. Okay? People that can't figure that stuff out really don't have an opportunity to do that. They're too busy blowing out their account. Okay? So you'll notice it's much easier to trade a micro lot than a standard lot for a lot of reasons. One of them being that you care a lot more about larger amounts of money. Okay, so if you care more about it, you will be more emotional just from a psychological standpoint. And I'm not telling you guys this for fun. This is because I've been through this myself, and a lot of you have responded with, well, really probably similar feeling. So if you've ever blown a lot of your profits or all of them in a day or lost your whole account, then that's something that usually sticks with you. And that's why I harp on it here for people that are brand new, because you don't want to go through that. You don't have to. Okay, you can learn from the mistakes of other people that were more, careless with their money than you might have been yet. So that being said, okay, you have to care on the front side more than the back. Okay, if you don't want to be emotional, that's really what it is. If I plan and I care about my money before I make decisions to spend it, then I'm more likely to make better decisions. Okay, so right now we're working our way towards a higher price. Okay, where do I want to put my stop loss is the question. I've got lots of lines I drew down here. I don't think I want. Okay, keep it simple here. Okay, I did want to leave that breadcrumb for myself where this Fibonacci extension level is above. And actually, reality is let's take another little strategy I haven't shown you guys yet in this session. And really, this is one I use a ton. I want to trade this like it's a downtrend. Okay, I want to see where my 382 level is. Okay, here's my 382 level up here, all the way up top. Because this is really just going to help me find where I think the market might take a little bit of a breather. Okay, this 236 level, we never hit it. Okay, that's crazy high probability. Based on my experience, okay, that's a lot of possibility of getting back to that price. Okay, the other one that I think is high, probably 80%, is probably this one up here. Okay, I say 80%, that's not 100, okay? And neither is 90%. It's where both of these targets are. So this is my 80%, 90% levels. Obviously, the closer one is more likely to happen than the one that's further away. Okay, so now I've got some breadcrumbs for myself. I can figure out where I may want to exit. Okay, where do I want to put my stop loss? Let's go ahead and just make this a little bit more simple. I like to get a little bit too far into drawing pretty lines in places, but let's go ahead and draw our support levels, okay? Because that's where I'm going to want to have my stop loss is going to be behind my support levels. Because I don't want to, well, let's just say I don't want to lose this trade. So if it comes down a little bit, I want to jump out. Well, after it turns around, okay? So I want to give myself enough breathing room. Here's my blue level. We're testing this boundary again. Okay, we never, in my opinion, it doesn't look like we actually hit our 236 level. So it may be beelining its way back up to that. I'm going to test that theory a little bit more. So I've already been in this trade. I've already been in this position a ton over the course of the last couple of days with the Active Trader Max running live. I'll show you guys those trades in the history here in a second once I get done. But there's where I'm looking to exit. I don't want to have risk reward that doesn't make sense. Okay, I am very confident about this. I'm going to use S1 down here. If we come below S1, probably not as great. Okay, I can't afford to get out this early, so we're not going to do it. I'm going to try to aim for our 382 price a little bit higher. Okay, or my other option is I can plan to get in at a lower price. Actually, let's bring that other line back so we can show you guys. Okay, so if I decide that I want to get in at the lower price, I may be able to exit at my 236. Okay, so I may place two trades here, and just to show you guys what I mean, how I'm going to go about doing that, I'm going to go ahead and place another blue line here at my current market price. Okay, so if I enter at my current market price, my stop loss below my S1 level here, because I want my S1 to act like a shield for me, okay, then I'm going to have to trade this all the way up to my 63853 price. Okay, however, if the market comes down to 62 down here, I can have the same stop loss and I can exit at 63 and have solid risk reward ratio. Okay, so if this thing digs against me, I want to get in at the better price. Then I can get out earlier, take profit before I get to the end. So a much more complicated entry strategy than just buying now. However, that said, I'm going to show you guys how to set it up. I'm going to do it right now. I'm going to enter it. So current market price, okay, I'm looking at a risk reward from current market price to my higher exit level of 145 pips in opportunity versus, we'll call it 95. Okay, so 145 versus 95. So this is 95 in the stop loss column here, 145 at the limit. And I'm gonna go ahead and click on buy right now. Okay. All right, and the second trade is gonna be more fun. I'm gonna go to pending. Okay, I've already placed this first trade from current market price. You guys don't need to see that line anymore. I've already got my entry line above, so there it is. Okay, right at my 382 level from the high time frame. Okay, my stop loss is down here. We come and test our S1. I'm gonna get knocked out of this trade. Okay, if the market comes down and tests my blue line, I want to jump in again. Okay, so what that looks like on my pending, this is a pending buy at 62.05. Okay, so we're going to say 62.05. How much risk are we talking? Okay, go ahead and measure here. 59 pips. We'll call it 60. And here I'm trying to get 120. So this is a 2-to-1. So 60, 120. Okay, if I do say a 0.01 here, I'm risking $6. Okay, to try to make 12. I could risk 12 and try to make 24 if I want also, because I think this is a great trade. And now there it is. That's all I had to do. I doubled my risk. I got slightly greedier, but a reasonable amount. $12 versus 650 or whatever's in this account. If I lose this trade, am I going to live to trade another day? Is there a chance I wake up in the morning and I think, oh my gosh, the world is over. I lost $12. The answer is no. No. So I'm going to go ahead and click place order. And I like to put as much emphasis on this as I can, animate this up for you guys so you can think about it and remember when you click the buy button. Am I going to worry about this later? I mean, that's it. I mean, that's really, in my opinion, what separates the good traders from the ones that really can't ever get it figured out because they don't give themselves enough opportunity. And it's honestly, it's sad to watch. So personally, I like to help as much as possible. And, you know, right now our NZD angle seems to be going good. We got time for a couple of more. So another fun one to look at. Okay, let's go ahead and check out the Aussie New Zealand. See where that one's at. Australia previously has told everybody that they're not going to raise rates until 2024. That's 2 years away. New Zealand just raised their rate this week. Okay, so they are much more hawkish, okay, than our other friends down under in Australia. And that being said, let's go to the all-time frame. We're not going to go on our feelings. We're going to go on what is actually on the chart and how does the market feel about it? That's why you look at the technicals. How does the market feel about what's going on? And to me, it looks like we've had this like sideways, like wedge forming here for many years. Okay, you guys see that? Okay, we're gonna cut off some lines there, but that's basically what I'm looking at. Kind of got a wedge there because the market likes to stay in these prices. We have wicks. I'm just gonna cut off the wicks on these. Okay, that's really kind of what I'm looking at on the Aussie New Zealand. And you know, those of you that are in Australia that are in here, do Australians buy things from New Zealand? Do New Zealanders buy things from Australia? Do they do it a lot? I mean, the people that aren't from Australia and New Zealand can probably answer that question. The answer is yes. By proximity alone, that's like asking if the US does business with Canada. Okay, so all those things considered, this is what the market's done. Okay, so they keep their money nice and tight, nice and close, so that they can have predictable import-export pricing, okay? Because if some reason the Australian dollar goes up like crazy, New Zealand might look for other places to buy things than Australia. So that being said, these seem to be fairly close. They have been, doesn't matter what I think, that's just what's happening. Facts, look at the chart. Previous prices are previous prices. I don't make them, okay? So if we look at this here, we had big turnarounds at this price. Actually, you know what? Let's delete. You guys already know that we're at a high price right now versus our wedge, okay, that we just drew, okay? And let's actually make this a little bit more maybe juvenile. I don't want to call it juvenile, but make it easier to see. where we are right now at current market price. Let's just go ahead and pull a box over the current market price and see what happens when we go further over. Okay, maybe this thing's got a big price pocket in the middle. We don't even need to get all over the edge. We're just going to cut out the middle. Okay, so our wedge is pointing towards the middle on the high time frame that you guys just watched me draw. Okay, and that being said, we've got a little trend here. Okay, on the top. Okay, this is a couple of years worth of data. You know, there's our trend. We tested it. Okay, so does that mean that maybe we come back? You know, I show you guys M's and W's and all sorts of, I don't know. I don't know how many strategies we're at so far here today. But, you know, I like to show off. So here's another one. Here's a big W. Okay. You guys see that? You guys have seen the cute little, I don't think gold and oil are going to be bearish, Michael. I think they're going to take a little bit of a bath to start the week next week. But I do think oil is destined to be at higher prices. I think oil and gold are going to be relatively volatile. So I would be looking for low prices maybe for a pending opportunity. We can check out gold and oil here in a second. But essentially what I'm looking for is this cute little cursive test on our price pocket that happened in the middle of our W. Okay, that's really when I find a big W like this, I want to trade back to this price I just circled here. Okay, so knowing that, I'm going to get rid of these two things that are in my way. I'm going to figure out where I've got lots of turnarounds in the middle, okay? Because I've got my current market price up here. If I get another stop loss on here, I can figure out how far I have to go with this, but we've got lots of prices that haven't been breached in a long time at that level, and I may even be able to get closer, okay? If I zoom in here, I've really got a true high, but I'd be calling a top if I go right where we are. Some people might draw a trend line right here and notice that we broke it. Okay, so I think, you know, we're getting lower lows. Okay, if we look at this here, we'll zoom in, lower lows, lower highs. Okay, where do I want to trade this back to is the question. Okay, it's at a little bit of a high price. I think this is a great sell opportunity. Okay, do I really need to be this far away with my stop loss? Let's get a little bit closer. Okay, because I've already got a confirmed lower low right here that maybe you guys want to see a little bit more clearly, but that's a lower low on the right side of my trend line. You guys with me? I know we get into a lot of stuff here, okay, but that's a lower low on the right side of my trend line. How far might it go? I don't know. Let's measure with our Fib tool. Let's use this ancient ratio to try to figure out where we might want to exit on this position. Let's get a Fib on here. Looks like we're in the, well, we didn't quite make it to our blue territory. We're at our 618 right now. I almost can't wait to hit the sell button on this one. But you know, I don't need to be that in a hurry. Okay. There's my exit price I'm looking for. Let's go ahead and get my trade window open for this trade. I am definitely going to short. Let's measure this risk from current market price. Call it 80 pips. And I'm going to try to get 108. So let's say market order. This is a sell. I'm going to risk 80. And I'm going to try to get 105. Okay. So not an incredible risk to reward ratio. I may not want to be too overzealous with it, but I would be cool with making 10 bucks because this could be real quick. Okay. I'll buy lunch for myself with this if I can. And I'll risk, you know, a cheaper fast food lunch. You know, so this isn't really like a mind-bending, life-changing decision for me. If it comes my way, I can always load into it more. It might come a lot further down. You guys can see this here. We had a trend upward for a long time. Okay, this is a 4-hour chart. Let's go back to the, say, the weekly, so you guys get a better idea of how long this might take. Okay, but this could be weeks. This could fall for the next several weeks. Okay, just to get back to this W level. In reality, I really may have been a little bit too soft in this one, in my opinion. You know, I could have risked a little bit more money there, but hey, I've got a bunch of other trades open. I've got lots of other exposure. Do I really need to do that? Do I? You know, I might lose this USD JPY trade. And actually, this one actually doesn't look like it has a stop loss on it, so I may want to fix that real quick. My 0.02 price. Let's go ahead and get this, let's see, at a position. 115.856. Okay. So now I've got a stop loss. I feel a little bit less, cavalier about that trade now. So now I'm protected. I don't have to worry about any of this stuff. I can let it rock. Let's go to oil. I can't actually place oil trades in my Forex account here in the United States. You guys are all spoiled outside of the US. Okay. If we look at this here, that looks like a serious come down type of candle. Okay. Got a big wick happening. Okay. We look what happened yesterday. We tapped that 100. This is a bearish hammer. Okay. Shooting star, whatever. There's lots of different names for these, I guess, but my feeling is that is a hammer. Okay. We just hit $100 yesterday. Okay. So I'm going to clear this out. That doesn't mean it can't come up higher. That just means that it might take a little bit of a breather. Let's go to the all-time frame so you can get a better feel for what's going on long-term. Okay. A lot of people are, surprised that oil could get to this high of a price, but this is where it was when Barack Obama was president with Joe Biden as the VP. So is it really that surprising? Is it really that surprising that we would drive oil back up to where it once was with our previous president? I don't know how much clearer I could make it, but this is where oil was for most of Trump's presidency. Much lower down here. We did get some resurgence as we had increases in demand because we were increasing supply, and that's really the biggest change that happened. We increased supply. The U.S. was a big player in the oil industry, oil game, and we had a lot of extra supply that we are no longer investing in. Okay, so what that means, then we go ahead and sanction Russia. They can't do business with Europe. Then that means that the oil supply is even lower. And essentially, we're just driving down supply. So if you look at this here, okay, this is our trend that existed for many years over here. Okay, we'll go ahead and draw that. Very clear cut. We broke it. Okay, so that isn't the trend anymore. Okay, we've got a higher low on the right side of this trend line. I'm going to just delete it because we don't need it. This is our new trend. Okay, as far as anything that I've ever learned about trading, this is our trend, and we're above it. So this is an uptrend. So I do not want to necessarily look for lots of sell positions. I may sometimes, right now may not be one of those times. I might be better off just looking for a place to buy a dip. Okay. So here's my fib levels, the price I think this could really get down to. And this is if, Biden's talking about releasing a bunch of strategic oil reserve for God knows what reason, because we already know the last time that they released strategic oil reserve this fall. Okay, I'm going to go ahead and draw that with a box so you guys can get an idea of how far that happened the last time we dumped from this strategic oil reserve. There it is. There's that move. Okay, so I'm going to copy that. Okay, if they decide that they're going to do the same thing again, okay, and they're going to draw from the strategic oil reserves, I think there's a good chance we come all the way down and maybe we test our AB boundary. Okay, so if I was going to look to buy on oil, right now it's too expensive in my opinion. Okay, this is some of the highest prices we've seen in many years. We're talking like 7-8 years. Okay, so I don't necessarily want to buy at this price. We're buying a high. If you're buying right now, like, if you got money to do it, smoke them if you got them. But personally, if I was going to buy futures contracts or anything like that, which is really the option I have here in the United States, I'm going to wait until it gets to 84 bucks. At least. Okay. But reality is, I think it can come lower. I think 77.5. How many of you guys think oil at 77.5 would be a much better price than right now? $15 higher. Probably all of you. That was a redundant question. Okay. I love you guys. Just want to make sure you're awake sometimes. That's really where I would be looking to buy. Okay. And then I would be looking for a new extension up here at this 103 level. Or, maybe the government decides to do something again. I don't know. Oh, undo. Didn't want to change that. Need to get one more line on here. Show you guys where I might have a stop loss for something like this. Be down here below. The odds of oil getting to, $63 again, pretty slim. But that looks like the opportunity for us to come back, test our trend line here, and move up. Okay, there's a lot less, in my opinion, risk in trading with the trend, because that's what happened most of the time for the last couple of years. So the buy position, in my opinion, is the safer side of trading oil right now, and for the last 2 years. But this does look like an opportunity that some traders might want to go ahead and short Okay, so if you are looking for a short position on the way towards this other opportunity that I mentioned at 77, that's 15 bucks away. A lot of you are thinking, well, I want to catch some of that 15 bucks. Okay, so what that might look like, just to give you guys a quick idea, I'm going to actually just move these other lines here. I might want to trade this back to my 382 price and not any further than that. Okay, and my current market price is up here, up top. Okay, and you guys might think I'm a crazy person selling on this oil right now, but that might be what I do. Okay, stop loss up around 96, 97. Because if it goes up above 96, 97, it could go right for our 103, 102 type of prices. We've got a big wick here from yesterday because basically Russia made it look like they're going to decisively take Ukraine quick in a day, and we're not going to do a damn thing about it. Anybody seen any news that looks different? I haven't. And it looks like the market is kind of telling me that. That's what this shooting star is. Okay, so if I think that we can come down, test our 382 level, okay, this might be a short opportunity on oil, which might be a little bit different than what you guys were expecting from me here today, but hey, fun, fun, fun. Let's keep on moving. You guys wanted to see gold, and then we got to get out of here. I'm out of time. Gold, you guys see a similar formation up here? Okay, I haven't looked at this one in a while, at least not on this chart. But this looks like we hit some pretty serious highs above. That looks like a big wick. Okay, wicks are fear, bodies of candles are confidence. Okay, does that make sense? Wicks are fear. This is a bearish spinning top. Okay, we might come all the way back down and test much lower levels. Okay, in our demand zone where we've spent most of our time. Okay, this is still an uptrend. Okay, if we come to the high time frame here, let's come to the week. Okay. Reason why I think this is an uptrend is because, you know, you can draw lines like this pretty easily. Okay, here's one. Okay, we're way above that. Okay, so let's go ahead and draw another one, maybe from here. Let's get the next one. Okay, so we're above that one too, and here's another one. Okay, we'll just draw that one just like so, because we got true lows there on the bottom. That looks up. Looks like an uptrend all day and twice on Sundays. Okay, this looks like a counter trend. Okay, right here where the market got forced down pretty heavily. Okay, from our highs we achieved earlier in 2020. It looks like the coronavirus madness beginning. Okay, so there's our counter trend line break, and really some of you might have drawn this line over here at certain points. It might have been all the way down here. Okay, so the reality of the situation, doesn't matter where you drew that one, this is an uptrend. Okay, this is a counter trend that I drew. We're getting higher highs and higher lows here. If I zoom in here, so here's a low, and here's a higher one, and here's a higher one, and here's a higher one, and you guys get the point. Here's a high, here's a higher one we just made yesterday. Okay, so I think uptrend, but it's also kind of sideways, so I think gold might take a little bit of a bath also and come down. No gospel on how far or anything like that, but I think the 382 level seems like a popular price that people like to pay. Okay, so I think that this is a buy at, you know, 1830. I think 1830 is a great price, still $50 to the south. So if you guys are looking for a target on something like that, that might be where I would want to look. Okay, so this is all basically predicated on the fact that I think that Putin's just going to take Ukraine real quick and it's all going to be over, or they're going to come to a surrender, and, you know, oil's just going to keep moving up higher, and, you know, they'll have a scapegoat for that. It was war. It wasn't anything to do with the inflation or us cutting supply in the US, and we're one of the largest producers on earth. You know, so not to make jokes about how stupid I think that all of the governments in the world might be, but, you know, I'm a trader, so I naturally don't trust the government. Okay. Not that that makes me a better person or anything. I don't trust the news. I don't trust any of it. I trust the numbers. I trust the raw data. I trust what I can risk. Okay. That is the point. Okay. So that being said, we are out of time, folks. I do need to get going. Appreciate everybody taking the time here today to listen to me jabber about lots of trading opportunities. I got a lot of them I opened in here today. I showed a lot of trading strategies in here today. I hope you guys enjoyed. It is Friday. I know it's a tough to mess up a Friday. It is the weekend. Okay, again, this is Will Bridges from 123Trade. I hope you guys enjoyed. You guys be good or be good at it this weekend. Take care.